Good afternoon, everyone. As always, we're delighted to have you with us today. Today, we're showcasing two campaigns on the Spark site, both very strong businesses with great potential, and more than anything else, so both have strong products and strong teams. First off, we've got HaloSOS, which are live on site at the moment, and then we have BusterBox as well. Both of the campaigns being showcased today are Spark alumni. They both raised with us 2 years ago and have grown and developed their businesses and are raising again at a higher valuation now. So investors who invested with them 2 years ago have already got a paper increase on their investment. And there are many of the investors who are following their investments back into the businesses as well. We've got a very exciting pipeline of new campaigns waiting in the sidelines to go onto the site as well. And in addition, we have some very exciting novel businesses that we'll be introducing to you very shortly. Don't forget, unlike other investment vehicles, investing in companies through Spark is with zero commission. Investors pay nothing at all, no commission, no fees for you to ever consider. As always, we're very keen to introduce and to arrange one-to-one meetings with the promoters. So if any investor wants to ask some more detailed questions of the business before investing, we'd be very happy to arrange those meetings for you, and we can facilitate that. So after each presentation, we'll open the floor to questions and answers from you, the attendees and the investors. So please add your questions to the Q&A box, not to the chat function, please. It makes it a bit more difficult for us. So the Q&A, and we will put them to the promoters as well. So let's get started. First of all, we've got HaloSOS, and Liam Darling and Fiona Maloney are going to be presenting. Liam, you're very welcome. So,
hey, Chris, there we go.
Liam is the CEO and head of sales for HaloSOS, co-founder, of course. And we're very proud to say that Halo, part of the alumni, as I said before, and you raised 160,000 with us back 2 years ago, and have used this to scale the business and secure a number of hotels now in the US, which has been a great boon to the business, obviously. Many of the investors have invested in the last round have indicated that they'll be following on and have actually gone on to follow on their investment, including one of the small consortiums of seasoned investors who will be increasing their investment by a considerable margin. You've already raised 325,000 euros on the platform and are looking for 450. We've just heard that the lead person in a local investment syndicate has just indicated that they believe they've got 150,000 to join onto that 325,000. So this will take Halo into the overfunding realm. So it's likely that you'll close very soon. So Liam, over to you. Please share your screen and go through your presentation, and we'll ask your questions in a few minutes.
No worries. We all set?
Yep, we can hear you and we can see your screen in full. So great, away you go.
Yeah, thanks for that, Chris. Yeah, HaloSOS, the first market we deployed our safety as a service software into was the newly regulated and newly legislated US hotel market. And now that we've proved the technology, proved the business model, we're looking, as Chris said, to scale the business, and we're looking for 450,000 in private funding to execute that. So where did the new regulations and the legislation come from in the hotel market? Well, 2018, the largest US hotel union did a survey, and it showed that 58% of all its members like Maria here, were subjected to sexual assault at the hands of a hotel guest. In addition, nearly 40% of US employees fear on a daily basis that they're going to be shot in an active shooter incident. So those figures, even though they're scary and horrendous, were a catalyst for change. And the catalyst for change occurred firstly with the big brands, the Hiltons, the Marriotts, where they came together and said, if you want to retain your brand, you must provide your staff with a safety solution by the end of 2023, non-negotiable. So essentially, we're solving two problems. The first problem we're solving is for Maria, for her personal safety and her safety in crisis events. And the second problem we're solving is for hotel operators so that they comply with brand mandates and new legislation that's coming down the line. So how does it work? So every day, Maria goes into work. She picks up a smart wearable as opposed to a dumb panic button, and she goes about her daily tasks. If she feels uncomfortable or she sees an event like potentially human trafficking, she knows three things. The first thing she knows is she's multiple ways of generating an alarm. She can either press a button on the wearable or she can create an alert using a keyword. The second thing she knows is that we can locate her, or the responding team rather can locate her down to room level if she moves from room to room, because we've deployed a little series of beacons throughout the property, which gives us room level location data. And the third thing she knows is that the team are already on the way, because the messages and alerts are delivered in near real time. The second module that's already deployed is the active shooter type solution. This starts with the front desk or security. They create the alert and they want to know two things. One, they want to know where everybody is in the property. And two, they want to send them a simple message, tell them what to do for the better outcome. We actually see this part of the module, this module expanding out far beyond hotels. And once we secure the hotel market, we look to do that. Currently, we're in 5 hotels in the US. We've monitored over 150,000 hours of staff safety. And we'd argue that our performance metrics are far ahead of our competitors. The market driver. So I've mentioned this mandate that's come from the brands. So basically that covers about 5 million rooms in the USA. And it says that by the end of 2023, you have to put a solution in place or else lose your brand. On top of that, then you've got city ordinances, you've got state legislation pending in a number of states, and that covers about another 4 million rooms. So you got about 9 million rooms in the US that have to be covered. And right now, there's less than 20% completed. So there's 80% of the market still there. As Chris said, we raised 160K in September 2020, and we got some funding from EI. We built a small team. We created a competitive advantage by building our own rack charging system. We deployed our first trial site in a hotel in Dublin. But more importantly, we did this. We secured our first commercial property in DC. So that is a 600-bed Marriott property. It's important to say that Marriott don't own properties. So we contract with the operators of the property. And the company we contract with is a company called Crestline. So Crestline have an additional 125 properties that we're currently looking to scale into at the moment. This gentleman here is Donovan. He's the GM of that property I just showed you. He's an employee of Crestline, and he's been acting for an advocate for us into the rest of Crestline, which has been fantastic. That's myself and one of our resellers at a trade show, and that's what we'll continue to spend funding on, is getting out there, getting the brand, getting the sales. And the other thing we did was we secured Donahoe Hospitality. So Donahoe, like Crestline, is an operating company. It has 18 hotels. The contract we secured is worth about $700,000 over 3 years. It secured our position in the DC, Virginia, Maryland area. 3 weeks ago, we deployed our first hotel in Las Vegas. It also gives us referenceability across all these other brands. So what we've done so far, 5 hotels deployed, about 1,900 rooms under safety management at the moment. And we're doing recurring monthly fees of about $5,500 a month in dollars. Contracted, but not yet deployed, excuse me, we have an additional 14 hotels to go. So that will add an additional 145,000 in install fees and an additional 9,500 in monthly recurring fees. I'd ask you to concentrate in the top 3 there. So the brands are very nice to look at, but the reality is our customers are people like Capstone and Crestline, and that's who we actually focus on, and that's who we contract with. Our pipeline for the rest of the year is looking very solid. We've 90 plus hotels in it. Again, we're going to concentrate on companies like Hersha, Concord, Crestline. Most likely in terms of next sales, Arlo out of New York will give us our first New York property. We've had the verbal on that already. We expect a decision on our first Colorado property within the next month. And then we have a quotation out, and we expect a decision from Crestline on a $800,000 deal that we're bringing over the line within the next quarter. In terms of sales, the way we go to market is through channel partners. So we have formal relationships with companies like Dickerson, Sutton, and Cimbria. And then we have relationships with companies like Sonify, who provide Wi-Fi into a hotel, or Dormakaba, who provide door locks. They're mutually beneficial. We have relationships with those. And the interesting one there is Hubcats. They are an Irish company who sell into the Caribbean. So this 5-star promise actually stretches from Canada all the way down through South America. And they now have our product in front of Digicel. We'll continue to spend funding on trade shows, sponsorship of trade show events and that type of event. And we'll continue with our digital marketing. So digital marketing for us, here's a sample of a digital marketing campaign. We did a 1,000 email campaign in Colorado recently. We got a 10% open rate, but what it really translated into is potential new business of 425,000 in sales. If we replicate that, which we will, across our kind of 3 other verticals, which are our 3 other geographic verticals, which are Mid-Atlantic, Southern, and Intermountain, then we expect to see 127,000 rooms added to the pipeline in Q3, Q4. Business model is very straightforward. Hotels are used to paying for things on a per room basis. So it's $50 per room install, $3 per room per month for 3 years. And this is kind of our projections for the next 3 years. So we'll hit our 48 hotels for this year. And then I'll draw your attention to this big jump. And it is a significant jump. And, you know, why does that happen? So that happens for 3 reasons, or one of 3 reasons. The first reason is 5-star promise, end of 2023, non-negotiable. 6 months out, the pressure is really going to hit these hotels. So we're going to see a ramp up there. Second thing is we're seeing union mandates coming into play in New Mexico and Washington, D.C., which are driving interest and driving sales in this solution. And the third thing is the nightmare for the operators is if California and Florida legislate simultaneously, then it becomes a vendor's market rather than a customer market, because they're 2 of the 3 biggest states in terms of hotels. By 2024, we'll have done 300,000 rooms, and that will give us 10 million in ARR. The competitive landscape is kind of ripe for consolidation. I'll draw your attention to Assa Abloy there, which is a potential exit for us. I will say we've come up against all of these guys and beaten all of these guys so far. And the reason is because they offer a dumb panic button. So we offer the only multifunction smart wearable that allows us to do proper alerting, proper accuracy locating, and proper mass crisis notifications. But ultimately, it allows us to do this. It gives us a product roadmap that a dumb panic button you simply can't have. So this product roadmap is derived from conversations with hotels, with customers, what they want to see next, and what we can actually deliver for them. In terms of the funding requirement, it's a 700K funding requirement. 250 that is hopefully coming from EI, as usual, is subject to IC. 450 based on what Chris told you earlier. We will be oversubscribed on this round. Right now, it's looking like the end of next week, we'll hit the 500K mark. In terms of the team, a mixture of old heads and young guns. The old heads between us, we've designed, sold, built, deployed mission critical solutions across 8 different countries, and the young heads keep us their finger on the pulse for us. In terms of the exit, like I say, it's quite a market that's subject to a lot of mergers and acquisition. The way Assa Abloy, the competitor I pointed out to you earlier, gets rid of people is they just buy them. So they've made over 120 acquisitions in the last 20 years. We're currently working on a project with their direct competitor to provide a solution to some of the Marriotts. And so they are another potential exit for us. I think we probably covered quite a bit of ground there, but yeah, let's open it up to questions.
Great. Thank you very much indeed, Liam. That's great. You can probably kind of stop sharing and we can see everybody in the full Technicolor. Good number of questions already in. Carl, if you can kind of if you can show your screen as well. Carl, many of you have not met Carl before, but Carl's been working with us now for the last year and is a great addition to our team. So Carl will be answering those questions, asking those questions as well. Can I just remind you, if you do want to, I see a couple of hands gone up as well. If you want to ask a question, please do so in the Q&A box, and we will get those questions asked. So I'll head off, set off. One of these, interestingly, that you're focused on the hospitality. This would be very necessary application in health and hospitals, particularly emergency rooms and outpatients and mental health and drug rehab facilities. So from that statement, really, have you got any desires and aims to kind of move out of the hospitality into other sectors?
Yes, we absolutely do. I'll take that one, Chris. We absolutely do. So there is a tremendous application for this product and this solution across multiple verticals. Schools in the United States are a key one as well for us. And we're finding that they're coming towards us right now. Our focus is on the hotel space for this round, but we will be keeping a very close eye on other markets. Schools may go to federal law pretty soon because of the shooting incidents that they suffer in America a lot. We have done quite a bit of research and due diligence into those other verticals as well. We have experience in the healthcare space within the teams as well. So definitely it's an area that the business will scale into and grow into, particularly as indoor location technology is growing. It's a new space, a new industry, and it's definitely one of those areas that needs to be tapped into for sure.
Very good. Carl.
We've one here. So you've got an impressive pipeline showing rapid growth. What's the biggest constraint on getting these new hotels onboarded? Is it working capital, hardware procurement, physical install resources, or is there anything else you'd like to mention?
I think it really, so if we kind of look at the points, we're not overly concerned about hardware procurement at all, really. We're hardware agnostic for a start. So, you know, beacon technology, which makes up our biggest cost, it doesn't really matter what the beacon is once we've tested and ensured it works properly. So we're agnostic to that. So in terms of supply chain, we're okay with that. The way it's actually installed is through our reseller partners. So they're the guys who put it in. So we're not really concerned about that. I guess for us is it's more to do with, like, say, the working capital side of stuff. We need to be doing, you know, yes, we've an impressive pipeline till the end of this year, but we want to grow that pipeline more. That's where we want to spend the funding. It's really about generating more sales. We have it down to a fine art now, the install. We've cut timelines. The product works. So it really is, for us, it's about growing the pipeline. So I guess it comes down to, yeah, it's a working capital issue, really. Onboarding hotels, you know, it's 3 days to do a 600-bedroom hotel, and we have the resellers to do it.
Very good. Thanks. You mentioned the operator groups that you're approaching as your clients, really. But are the brands having any input into whether this is rolled out or who's going to roll it out from your side of things?
Yeah, there's a number of different approaches, Chris. From the operator's perspective, they're the ones that make the decision for the hotels that they operate for the most part. That maybe you might find a very large operator is broken down and segmented across the United States. A 400 hotel operator might have a Midwest or a Mid-Atlantic or a West, Northwest kind of region where they might be broken down into groups of 20 or 25 or 50. And we're approaching it that way as well. The groups that we're looking at right now, and will grow into larger ones, are kind of groups that are 18 hotels, 15 hotels, 20 hotels, because we've been successful. So they will take that mark to go on with that. We also operate at a brand level, at a hotel level. So it depends in terms of if our channel partner has a local contact that they can begin to influence further up the chain. Most hotels are managed, obviously. And then you also come at it from the brand level down as well. So there's many different approaches, but our preference is to stick with that operator, and that's been working quite well.
Great.
I've one here. So can you explain a little bit more what would happen if a hotel does not comply with the 5-star promise, and if there are any consequences to that?
Yeah, there are a number of different consequences. So one of the first ones is if a housekeeper in a property hasn't got a solution in place, she can then sue the property as an individual up to $350 per day. So it's $350 per day per housekeeper. So if a property has 20 housekeepers, And then that continues on until a solution is put in place. So there's that from a housekeeper perspective. From a brand perspective, in order to maintain your brand status, so if you think of Marriott, they don't own any properties, they manage the brand. If you're a Marriott property and you haven't got a solution in place, you run the risk of losing your brand status. Obviously, there's litigation costs. If there's a solution that needs to be in place because of the law, there's issues there with fines. If an occurrence happens or an alert needs to go off and they don't have a solution in place, you've got increased litigation costs. So it's a multiplier effect if you don't have something in place under the AHLA brand mandate. That's one situation. The state laws is another situation. And then you've ordinances in cities. So there's a number of different factors that increase the liability to the property, notwithstanding they could lose their brand altogether.
Thank you.
How does your price per room compare to the panic button type application? I presume they mean the dumb panic button type application that you've got, or they've got.
Yeah, will I take that one, Faye?
Yeah, I'll give that one to you.
Yeah, so right now, the $3 per room per month is pretty much the benchmark across the industry. We think we're a little low on the install, so we know there's a flexibility there to raise that install from $50 per room install up to, we think $65 at this point in time. But the $3 per room per month is pretty much on the benchmark. We have come up against AT&T, who, to try and lever us out of winning a contract, dropped the price down to $1. But what the hotel sees is the hotel saw the value in this is an investment in a smart wearable technology solution, as opposed to a sunk cost into a dumb panic button. So pricing, we're right there in the ballpark. We haven't we've come under pressure from the big guys, and we've beaten them all by sticking to our price, and that's where we'll be. It's important to say that the per room charge basis is very readily accepted. It's the way all the competitors charge for a solution.
Great.
Just regarding your competitors, just someone asking how hard it would be for them to replicate your tech.
Yeah, it would be pretty tricky for them to come up with a smart wearable type solution, and we know that because we've gone through the pain and all the difficulties to do that. For instance, the locating algorithms that we built, the smart algorithms that we sit on board, that we learned those through our deployment in Buzzwells and how best to come up with a solution around that. So that's going to take them time. That's number one. Number two then is you do have to do an adjustment to the firmware, right? So they're going to have to get someone to do that for them as well. And then you have to go and you have to build all the back end and all the stuff that goes around it. So is it impossible to do? Of course not. It's not impossible to do, but it's going to take them a long time, and it's going to take them a lot of lessons to get there. One of the things that helped us in COVID in a lot of ways is that we were able to do that. We were able to build a solid product without having huge pressure on us. So it would be difficult for someone to get into the market now.
Great. Okay, time for one more question. What's the next hotel you're going to deliver, and what kind of sales and marketing activities you're doing at the moment? So kind of double question there.
Yeah, I'll do the deployment part. So the next hotel is a Hilton Garden Inn in a place called National Harbor, just outside Washington, D.C. It's in Maryland. So National Harbor is kind of like a bit like Disneyland for grown-ups, with casinos and restaurants and shops and hotels and stuff like that. They are back-to-back gel-to-gel hotels over there. After that, I think most likely it will be one of the New York ones or the Colorado ones, or one of the other existing ones that we're rolling out as part of the deployment. In terms of the deployments, Fiona, do you want to talk about the sales side?
Yeah, sales and marketing. We're running campaigns at the moment through email campaigns. So we're driving our digital communication. One of the things that we really want to grow is that particular aspect. So we want to get to the end of this fundraising round so that we can completely dedicate ourselves to sales. And we've done a very focused campaign in Colorado. We're starting one in Florida. We want to hire in, not just use outsourced teams, but hire in a business development manager into the team whose sole job will be to do that, because it is a full-time job. We'll manage this on a state-by-state basis. So where we have channel partners, we will run campaigns. So Florida, then we'll run one in DC, and then we'll scale that out and we'll manage that with the team to support us. So that's our primary way. We want to drive people back to our website. So website development is on the cards as well. So yeah, a lot of what we're going to raise will be specifically to do that. It takes a particular approach, and it needs to be managed from end to end. So we're really looking forward to growing what we're already doing and getting those good results that we're seeing, and scaling those good results. You know, we've got open rates of over 54%, and a lot of contacts coming back and a lot of interest, because hotels are open now and they're having some of the best profitable years that they've had for a number of years as everybody gets back to travel.
Very good, very good. Okay, thanks very much indeed. So Halo is alive on the site at the moment. 328, I think it is, €1,000 onto the investment, with a promise from the syndicate of another 150 plus. So very much met your target, or close to. You know, eventually when this money comes in, we'll have reached your target and overfunding. So almost there. So guys, if you want to invest, then please go ahead and do so. Right, for the moment, thanks very much, guys.
Chris,
Sorry, yeah.
just one thing. I know there's a couple of open questions here from Rob and Jeff, I think, and Peter. I'll jot them down and send on the answers to you so you can share it with them.
Yeah, absolutely. Please do.
Okay,
More
cool.
questions than we can always ask, or always the same situation. So yeah, please do so, and we'll get those back to them. Okay, thank you very much, guys. And Gary, are you there? Here he is. Gary, welcome along. Gary is CEO of BusterBox, another alumni from Spark, who raised with us also 2 years ago. Raised 167,000 from over 80 investors now, and has used that obviously to grow the business and scale quite significantly in that time. So BusterBox is a monthly subscription service for dogs. They help dog lovers save time and delight their dog by delivering fun toys and healthy treats to their door. In the time since that raise, they've increased their active monthly users by almost 50%, and have dramatically increased their lifetime value for each client too. Many of the investors who invested last time are reinvesting, many for greater sums than their first investment. So their investment is doing very well. So Gary, if you'd like to share your screen, I'll let you get on to give your presentation, and we'll see you in a few minutes.
No problem.
Great.
So as Chris mentioned, my name is Gary Redmond. I'm one of the co-founders of BusterBox. Also on the founding team are my two childhood friends, Liam Brennan and Paul Carrick. BusterBox is a subscription service for dogs in Ireland and the UK. We have a total headcount now of 10 people working in BusterBox. Put simply, we launched BusterBox to make dogs happy, because dog parents want to make their dog as happy as their dog makes them. We help by delivering top quality amazing experiences with top quality, unique products and accessories for your dog. And when someone joins our pack, our focus on satisfying your own dog's individual personality and likes means customers love their monthly delivery. We've just over 9,300 subscribers. The majority of our customers are based in the UK. Coming into 2020, we had just 2,500, so it's been a significant growth trajectory over the past couple of years. We've also got a 4.7 out of 5 score on Trustpilot. In 2020, we had a great year with 315% revenue growth, and we followed that up with 55% revenue growth in 2021. We did just under 2.5 million last year, and we've highly profitable subscriptions with over a 4 times return on CAC generated from each customer. So we're currently generating €225,000 monthly recurring revenue, and our goal for 2022 is to accelerate our growth post-investment and reach between 25 and 28,000 subscribers across the UK and Ireland. We also continue to grow our email list and social following, and we're preparing to rapidly increase customer acquisition. Some conversion stats now. So we've almost a 2.5% conversion rate on our website without running any discounts on the box. So we now feel it's a perfect time to scale up. We also capture thousands of new emails from our website from the sign-up flow we have, which allows us to keep the CAC down and upsell other product lines to our email lists. We've recently signed on a creative agency to improve the branding and make the business look top quality and professional across all channels. And we're currently generating customers for around €28 CAC. We have also got, in 2021, we signed on 2 industry partner businesses as investors into BusterBox. This gives us a significant advantage over the competition. How it works is that partner 1 has years of connections and know-how creating and shipping dog toys and other products out of China and the Far East. And they're assisting us now in creating our own brand of BusterBox products, which are delivered to our warehouse, and which is basically run by the second industry partner who's made an investment. And they basically are involved in storing, managing the products, fulfilling the boxes, and making sure everything is running smoothly. So we, at the founding level, we can really focus on the marketing and the growth of the business rather than fulfillment and anything to do with that. So we have our own dedicated BusterBox warehouse with the second partner now. Over the past year or so, we made some changes not only to the offer and the operations, but the operations as well. So we've been working hard on the sourcing side to streamline and reduce costs wherever possible. Obviously, with the industry partners, that's a big help. We've increased the prices of our subscriptions and started to generate additional revenue by referring customers back to our store to rebuy their favorite BusterBox products. And next month, we have a deal coming online with a treat company to provide us 2 bags of treats for each box with our own branding. So that means by guaranteeing 24 orders a year, we've gotten a great price. On the toys side, from this month, we have all of our own custom branded BusterBox toys, which are not available in any other pet shop, which gives us much more capacity for customers cannot go on and price the products versus something they'll see on the internet or in a pet shop. So it gives us a lot more defensibility. We're also currently developing new product lines such as subscription add-ons like flea and worming treatments to increase revenue from our customers. So all the products going from August 2022 will be completely BusterBox branded. So there won't be any other brands inside the box, which gives us a lot more exclusivity to the customers. And our customers love our products and our brand. We've over 1,500 reviews on Trustpilot and 4.7 out of 5 score. So we're very, very happy customers and followers. The box itself comes with 5 high quality items, including 2, as I mentioned, unique toys, things you won't generally find in your local pet shop. All the treats are healthy and natural. There's no, high quality brands is the only thing that we use. Each box comes wrapped around an exciting monthly theme. So the July theme, which is shipping at the moment, is Tales of the Tropics. So all the products, the toys and the treats are all centered around the theme, which obviously makes it more exciting for the customer as well as the dog. And it's a huge market. The pet market is over 24% of all UK households have a dog, and over £10 billion is spent on pets there every year. Subscription boxes are massively popular at the moment, 3,000% increase in traffic to those websites in the last 9 years or so. And an important one, dog owners continue to spend the same or even more in times of recession. And this is from stats such as Market Watch, Motley Fool, things like that. You can do some research online. So it's a highly defensible and recession-proof business. And the total market size is gigantic. We have over 2.5 million of our perfect customers in the first segment, which is female young professionals between 25 and 39. The second is female empty nesters between 45 and 55. These we found are the sweet spot customers who have either no children or children would have moved out of the house, and the dog is essentially the most important family member, and they want to spoil their dog as much as they can. In terms of generating customers, we're very skilled at running ads on social media, email, TikTok, Instagram. And all the advertising and sales is done in-house by the founders. So we're not raising to find an audience, we're raising to meet the demand for our product and scale up our customer recruitment. We know who our customers are and where they are and how to access them. And we also seek to branch out into new channels such as affiliate networks and insert swaps and some affiliate partnership deals with larger e-commerce brands like insert swaps and email swaps and things like that. These are channels that we know competitors and mentors are using to scale up rapidly in the UK. They do require a little bit higher investment than social media marketing though. Some growth opportunities. What we're focusing on a lot, especially trying to make sure we can further recession-proof the business, is trying to increase the average revenue per user and lifetime value by offering more products in our online shop. So on top of the subscription, we have an online store, which we send emails, SMS, and do promotions in regularly, just to diversify the revenue streams into the business. And also upselling our customers by offering an add to box service. So if a customer loves something from their previous box, we send surveys out, we send emails out when they make their payment, and we say, if you want to add anything to your next box, we have the technology in place for customers to basically rebuy anything they like. And that's starting to see a lot more revenue coming in from that channel as well. We've also begun to sell advertising space in the box and do some swaps with bigger e-commerce brands. So we actually got Nestle Purina last year, paid us over €12,000 to get to put samples in our box, which gave free products for our customers and also a revenue stream for our business, because obviously we have highly targeted customers. So it's another revenue stream for the business, which we're also looking to build out. New products. So we're busy this week testing new upsells in our funnel. We've got testing new offers all the time at the moment. At the moment, running a cooling mat for your dog in the heat at the moment, and also a free sprinkle pad. So we're always trying to introduce new products. We try them on our offers to see if they're a good gift to get customers signed up, and we also upsell them to customers when they come in. We're also exploring the heavy chewer box. So some of the customers do have a complaint about the toys being destroyed quickly. That should hopefully not be as prevalent now and from July, because the toys we've gotten from our industry partner are double stitched, which is something we requested because customers do complain about that. But we're also looking to introduce a more expensive heavy chewer box. We're currently preparing a joint venture with a dog trainer who's built out at Buster's Dog School as a puppy training course, which we're looking to also add as an upsell to their membership. And we've also tested dog food in the past in Ireland, which had great metrics, great lifetime value. The thing with the dog food is we had to cut it off because of Brexit. We couldn't source the food from the UK into Ireland anymore. And also it's going to require a good bit of further investment probably in the next funding round, because trying to get dog customers to change their dog food is a little bit different to the toys and treats, because they're probably going to have to give them a free trial, which is a big upfront cost, but the lifetime value is higher. So next target growth regions, along with introducing new products and deepening our funnel, we're looking at France, Poland, and Germany. These are the three countries that have some potential with their large dog populations, relatively low CPMs, and average pet spend. Being in Europe will make us more attractive to someone like BusterBox or a large pet retailer, as we've navigated the terrain for them when they eventually decide to expand over here. As I mentioned, we have done a test with BusterBox dog food in a couple of years ago in 2019. In April, we have it on our online store now for customers to go over and purchase one bag. We don't have it as a subscription. We've started to incentivize customers with coupons. But long term, with some better investment and better resources, we envision it to be a second subscription that customers can sign up to along with the toys and treats. So we've raised very little money on our journey so far, especially compared to some of our larger competitors in the UK. This means we've had to pay very close attention to our metrics and cash balance, which gives us discipline to invest the money wisely post-investment. We have two main competitors in the EU market. One of them is Viva Dogs, who is going longer than us. They're actually not doing very well at the moment. According to one of the founders actually reached out to us. He was looking to exit the business because he went down the dog food route and executed it poorly, and he was looking for actually BusterBox to acquire them, but just didn't seem like it was the right fit at the moment to do that. We obviously have to focus on ourselves and raising our own funding and increase our subscriber base in the UK and Europe, so we weren't looking to acquire him just at the moment. Woof Woof has raised significant investment, quite a similar business to BusterBox, but he seems to focus on marketing on month-to-month subscriptions instead of gaining long-term 6 or 12-month subscribers like we do. So a slightly different marketing approach. And financials. So as you can see, we've been steadily increasing the revenue since we launched. With the correct funding, we can accelerate our growth to a profitable position by the end of next year. We've also been steadily increasing our profit margin with scale and with better sourcing over the past few years, and with our partners on board, this will continue to get better. Our supply chain is insulated from a lot of the increases in costs because we don't have any middlemen, and we have a very favorable arrangement with our industry partners. We don't have to pay up front for products when they're being created in China. We only pay in the month that we use them, so we turn over our stock quite efficiently as well. We will need to expand the team in order to help us achieve our goals for the business on the marketing side. So in the next 12 months, we're looking to get to €500,000 monthly recurring revenue. Over the next 2 to 3 years, to continue to optimize the product, deepen our funnel. And there's been a lot of M&A activity in this pet market in recent years. We envision an exit to be forthcoming from either Bark, a large US competitor looking to expand into Europe, or a large pet chain that operates across the EU market and wants a steady stream of recurring revenue and sticky customers coming back to them as well. The largest e-commerce acquisition in history was a pet brand, Chewy.com, acquired in the US for $3.35 billion in April 2017. So half of the money will be spent on rapidly gaining subscribers using the channels that we know work so well. Thankfully, with our industry partners, we don't need much of a cash burden. We don't have much of a cash burden in terms of sourcing, and we don't need any equipment. So almost all the investment can be directed into growth and some optimization of the product. So a little bit further on that, we will go into deepening our product funnel. So creating the products I mentioned before, and the upsells customers have requested, and other opportunities we can use to maximize the lifetime value and average revenue per user. We also look to optimize our technology and fulfillment processes to deliver a better service to our customers via personalization and reduce churn. So one of the things it's a difficult challenge is having both the technology and on the back of that, the fulfillment to offer a certain level of personalization for when you don't get it right with a customer. So that's going to be some of the investment will go into actually setting that up and making sure we can deliver customers what they want, because for whatever reason, the customers are churning because you're not able to give them what they want. That could be because you're not able to source the products that they want at the right price. Obviously, with the industry partners, that will help the toys, the strength of the toys, for example, or their dog has a particular need that needs to be met. Now, we do obviously, if a customer comes in with a request, we do offer the customer to personalize their box to a certain extent, but it's relatively manual and ad hoc. So we'd like to have a better system in place to set that up so we can keep customers for longer. Finally, just some key hires on the marketing side. As I said, not a big need to invest in labor or equipment or anything like that. So just to help us to execute on our marketing plans is what we'll use some of the funds for as well. In order for us to achieve our targets, then we're in the process of raising between 300,000 and 500,000 on the Spark platform. We have 150,000 from Enterprise Ireland, subject to due diligence as well. We have a lot of interest from previous investors, so we expect this round to fill up quite quickly. And yeah, we have the EIS qualified 40% tax rebate. So finally, if anybody has any questions, then please let me know.
Great. Thank you very much indeed, Gary. Well done. Good number of questions coming in here. First one, can you talk through your unit economics? So, lifetime value, CAC, etc., and go through a few of those if you can, please, Gary.
Yeah, so we keep customers on average around 13 months, and the average revenue per user, including VAT and fees and stuff like that, is €26. So when you remove that, it's around 21. So the average lifetime value is around 300. And then we have a profit margin of about 45% at the moment, which is increasing because we raised our prices, but we grandfathered all customers. So as customers drop off on the all prices, they're signing up on the higher prices. So the average lifetime gross profit from a customer we get is about 138 to 140 euro, and we're getting customers for 28 to 30 euro on Facebook, which is where the majority of the customers come from. We do have email, TikTok. We're starting to branch out with. We've hired recently a partnerships staff member to basically focus on that. So the economics on the box, as I said, about a 45% profit margin per box.
Great. Thank you.
Just one, there's someone asking how competitive it is in the UK market, and why is your proposition better than what's there already? Yeah,
so there's a lot of smaller dog subscription boxes, to be honest with you, and most of them don't seem to get past a couple of hundred subscriber mark. What's different for us is we've essentially been really good at reverse engineering what the best dog subscription box in the world has been doing, which is BusterBox. So we generally have really high quality offers, really high quality free gifts. We focus on getting people on longer term subscriptions rather than just month to month, which we find had the higher churn. So we're really, really good. What we're doing better than the majority of them is our marketing and the positioning of the product and going after the customers. And obviously on the back of that, then the product itself with our industry partners, as I mentioned, all of our products are going to be completely BusterBox branded now. They're going to be double stitched, all the toys, which is one of the biggest complaints we get. So yeah, obviously what we've done better than all of them is being able to market the business better. And that has led to opening doors on the supply chain side and obviously industry partners. And that also insulates us from the supply chain issues as well. We raised our prices twice as well in the last 8 months, September last year. Well, that's nearly 10 months ago now. And we did it again in May. So we had to respond obviously to some increases in cost. But the good news is, since we increased our prices, we haven't seen a dramatic drop off in customer acquisition or a massive increase in churn. So obviously, customers are, the prices have gone up in the pet shops too. So we're not ridiculously more expensive than what they're paying now.
Good.
What do you see as the likely exit scenario for BusterBox, and who might that be?
Yeah, I mean, there's obviously BarkBox in the US who we IPO'd at the end of 2020 with plans to go into Europe. I don't know if them plans are on hold or not at the moment. Obviously a lot has changed in the world in the last couple of years. One of the biggest ones, I mean, there's other pet brands. We've talked to some other pet brands about possibly teaming up in terms of getting into Europe via a merger or an acquisition that way. In terms of a large exit, like it could be Maxi Zoo or one of those large pet chains that operates across Europe. And the thing that we'll need to demonstrate obviously is the growth across multiple regions.
Just, you mentioned how big the market is in the UK. I think you mentioned 10 billion in sales. Just what other countries are you going to target outside, or is there any intentions to move outside the UK market?
Yeah, exactly. So we mentioned there's challenges, positives and negatives to every country. We looked at Germany, France, and Poland as some interesting places to check out. We did some research into kind of what is the price of the pet products, what's the CPMs on social media, what's the attitude to pets, to people, what's the pet population. So they're the countries we've had a look at already. I mean, there's definitely a little bit more research to do. Maybe there's a possibility to acquire a smaller but well-run operation somewhere in Europe. We've looked around. There's a couple of them in the Benelux area. So yeah, it's just about kind of the right strategy going forward. Like definitely, it's something that's going to be new for us. But what we're good at is acquiring customers. So we'll need to put the processes in place, obviously with translation and things like that. So yeah, it's Germany, France, Poland are the interesting ones. Haven't made a decision on exactly which one to do it, but open to suggestions anyway from our mentors and people who've done it before.
But I suppose it's important that the UK market is very large, so there's probably no massive urgency there to expand out past it.
Yeah, I mean, it's definitely one of the more developed markets as well. I mean, somewhere like Spain would have a less developed market for our kind of product in terms of the attitudes toward dogs and things like that. But yeah, the UK market is huge. Another opportunity for growth as well is just deepening the funnel. So introducing upsells, tacking on add-on subscriptions, which we're looking at now, to just increase the average revenue per user. Could we go into, obviously dog food, as I mentioned, there's challenges with that as well in terms of the amount of money you'll have to raise essentially, because you're going to have to pretty much give a free trial or 75% off your first bag. So that's a massive cost that we were not really in the position to do that right now, but it's got a higher lifetime value. So if you're able to put those together, if we could we have access to dog food. The thing we don't have access to is a range of dog food, which means we have a really high quality one, which is great. It's 80% grain-free meat or whatever, but not everybody's going to go for that. So we are trying to tack on, if we can marry the customer acquisition, the fast customer acquisition of BusterBox with dog food on a higher lifetime value, that will also increase the value in the business. It's just the sourcing and the offer, really. Even if you have current customers, getting them to come over to your dog food is going to require a massive discount on the first one for the dog to try it.
There's a question here about the valuation, and I know you flashed up a slide on that, Gary, but can you talk through the valuation with regards to a couple of your competitors?
The valuation at the moment is a steal. Wolf Wolf raised at £15 million last year. I know things have changed in the last year, especially in the last 6 months. We did have an offer on the table at $4.5 million earlier this year, which we decided against for many reasons. So yeah, the valuation at 3 million is just over 1 times our revenue. And obviously in a high growth industry, we've got a great track record. So 3 million at the moment, I think, is a steal.
Someone asked here, you mentioned that your average churn is 13 months, but do you know what percentage of customers have extended their subscriptions?
So I only know the overall. We keep people for around 13 months. So the churn is between 7.5% to 8%, 7 to 8%, really 7 to 7.5%. So that's overall. So the majority of the customers are on 6 or 12 month subscriptions. So the way we acquire customers, we only give like an offer or a free gift on the longer term subscriptions.
Okay.
Great. One more question. Time for one more question. So with regards to the team, how have you got any gaps in the team at the moment? Who's going to be your next key hire?
The main person we need, and we know what we're good at and we know what we're not good at, it's someone with experience growing one of these direct-to-consumer brands, experience in the customer acquisition, someone who's done it in the UK market ideally, because we're definitely good at the marketing side of things, but being able to branch out into other channels with higher budgets is going to be something that we're definitely going to need help with. We obviously have some mentors and consultants we can talk to, but really having somebody in-house with that experience of scaling of one of these brands will be key. We have a great agency that we work with who are very, very involved in terms of the creative side of things, which is great because that's a skill set me, Liam and Paul don't have. And in terms of the team then as well, we have a customer service manager, 3 customer service agents, someone on a contract basis doing SEO, and we have the hire we made a couple of months ago who's doing partnerships. So she's kind of our sales director / offline / partnerships. So what she does day to day is she finds other brands that either in the pet industry or that are in e-commerce or a similar industry that would have a similar demographic of customers, and reached out to them. You know, maybe we do an insert swap, which is they'll put leaflets in our boxes, we'll put leaflets in their the deliveries or boxes. If there's a massive difference in the amount of numbers going out, they can pay us or we can pay them to make up the difference. And also in like email swaps going out to there. So it's a big channel that we're working on now with partnerships and sort of even some corporate stuff as well we're looking into as well. We have a deal in the works with a large pet insurance company in the UK where we could act as an affiliate. They're going to pay us £25 for every customer we can convert to their insurance, and they're going to offer our BusterBox to new subscribers for their insurance as well. So that's a channel that we're looking to build out as well. But the main one is just online marketing is where we get the majority of our customers from. So someone to help us with that.
Great. Thank you very much, Gary. Well done. And thanks very much indeed for that presentation. So, right, I think that we'll wrap it up there. But as I said earlier on, the campaigns are live on the site or about to go live on the site with regards to Gary and BusterBox. So you've heard from the principals there, and I think you'll agree that they're all worth a serious consideration for investment. We've already got a number of follow-up meetings with investors for the businesses. So if you'd like to have that one-to-one that I mentioned earlier on, then please get in touch with us and we can facilitate that and get you in front of them so you can ask those more detailed questions. But other than that, I think that's it for today. So I look forward to seeing you all very soon. So thanks very much, guys, and we'll see you all very soon, I'm sure. Thanks very much.
Thanks, Chris.
Thank you.
Thanks, everyone.